Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report that might leave Volcon shareholders feeling a bit like they're riding an electric motorcycle with a dead battery, not going anywhere fast. Before we jump in, if you appreciate straightforward breakdowns of corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can chat about this and other companies. Volcon Inc., an electric powersports company, just filed an 8K. This is a report companies file with the SEC to announce major events. And what's the big news from Volcon? Well, it's not good. The report is dated May 16th, 2025, but the key event happened a few days earlier on May 13th, 2025. That's when Volcon received a notice from Nasdaq, the stock exchange, saying they're in danger of being kicked off the exchange. Why? Because the price of Volcon stock has been below $1.00 for too long. Nasdaq has a rule called the bid price rule that requires companies to maintain a minimum stock price of $1. If a company's stock price stays below that level for 30 business days in a row, Nasdaq can issue a warning. And that's exactly what happened to Volcon. Usually when a company gets a warning like this, they have some time to get their stock price back up. But in Volcon's case, Nasdaq says they don't qualify for extra time. This is because Volcon has done a reverse stock splits in the past couple of years. A reverse stock split is when a company reduces the number of its outstanding shares, which can artificially increase the stock price. Volcon did this, but it didn't solve the underlying problem. Because of this, Nasdaq is saying they are not eligible for a grace period to get the stock price back up. The report mentions that Volcon has until May 2025 to appeal this decision, otherwise trading of their stock will be suspended May 22, 2020. Volcon says they plan to appeal, which will put the delisting on hold until Nasdaq makes a final decision. Alright, that's the core of this short report. Volcon is facing potential delisting from the Nasdaq due to its low stock price. And because of previous reverse stock splits, they don't qualify for an extension to fix it. Now, what does this all mean? For one thing, it's a sign that Volcon is facing some serious challenges. A stock price consistently below $1 suggests that investors aren't confident in the company's future. It can be a vicious cycle. Low stock price makes it harder to raise money, which makes it harder to execute their plans, which further depresses the stock price. The fact that Nasdaq is denying Volcon extra time because of their past reverse stock splits adds another layer of concern. It suggests that Nasdaq sees these moves as attempts to artificially prop up the stock price, rather than signs of genuine improvement in the business. Appealing the delisting decision buys Volcon some time, but it doesn't solve the underlying problem. The company needs to convince investors that it has a viable plan for long-term success. This could involve improving sales, cutting costs, or securing new funding. Volcon's situation highlights the risks of investing in companies that are still in the early stages of development, especially in competitive industries like electric vehicles. It's important to do your own research and understand the risks before investing in any company, especially one that is facing challenges like these. What do you think? Will Volcon be able to turn things around, or is this the beginning of the end? Let me know your thoughts in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more corporate deep dives. And don't forget to join our Discord community using the link in the description below. Thanks for watching, and I'll see you in the next video.